Section 2. Bitcoin, the digital gold standard. Bitcoin, created in 2009 by the pseudonymous Satoshi Nakamoto, pioneered the cryptocurrency revolution. It introduced the concept of a decentralized digital currency. Bitcoin operates on a blockchain, a public ledger of all transactions. This ensures transparency and security. Bitcoin's key feature is its limited supply. Only 21 million Bitcoins will ever exist. This scarcity, combined with growing demand, has driven its price up significantly. Bitcoin is often seen as digital gold, a hedge against inflation and economic uncertainty. Transactions on the Bitcoin network are primarily used for peer-to-peer payments. Its decentralized nature makes it resistant to censorship and control by governments or financial institutions. This has made Bitcoin popular in countries with unstable economies. Bitcoin's simplicity and security have made it a popular choice for both individuals and institutional investors. It represents a paradigm shift in how we think about money and finance. Understanding Bitcoin is crucial for anyone looking to participate in the digital economy of the future. Section 3. Ethereum, the smart contract pioneer. Ethereum, launched in 2015, expanded the possibilities of blockchain technology. Created by Vitalik Buterin, Ethereum introduced the concept of smart contracts. Smart contracts are self-executing contracts with the terms directly written into code. This innovation opened up a world of possibilities beyond just digital currency. Ethereum's blockchain can host and execute these smart contracts. This enables the creation of decentralized applications, dApps. dApps range from decentralized finance, DeFi platforms, to supply chain management systems and more. Ethereum's versatility has earned it the title of a world computer. Unlike Bitcoin's limited supply, Ethereum has no fixed cap on its cryptocurrency, Ether. However, its issuance rate is controlled, and recent upgrades aim to make it deflationary in the future. Ether is used to fuel transactions and run applications on the Ethereum network. Ethereum's focus on smart contracts and dApps has positioned it as a hub for innovation in the blockchain space. Its ability to support a wide range of applications makes it a compelling platform for developers and investors alike. Section 4. Purpose digital gold versus world computer. Bitcoin and Ethereum, while both cryptocurrencies have distinct purposes. Bitcoin, with its limited supply and decentralized nature, primarily serves as a store of value. It's often compared to gold, offering a hedge against inflation and economic uncertainty. Ethereum, on the other hand, aims to be a decentralized platform for building and running applications. Its smart contract functionality enables the creation of dApps, ranging from financial tools to gaming and beyond. Ethereum's purpose is to provide a global, open-source platform for innovation. This difference in purpose is reflected in their design and functionality. Bitcoin prioritizes security and immutability, ensuring the integrity of its blockchain and the value of its cryptocurrency. Ethereum prioritizes flexibility and programmability, allowing developers to build and deploy a wide range of applications. Understanding the distinct purposes of Bitcoin and Ethereum is crucial for investors. It guides investment decisions based on individual financial goals and risk tolerance. Are you seeking a store of value like digital gold, or do you believe in the potential of a decentralized world computer? Section 5. Technology, proof of work, and beyond. Bitcoin and Ethereum, while both built on blockchain technology, differ in their consensus mechanisms. A consensus mechanism is how a blockchain network agrees on the validity of transactions. Bitcoin uses proof of work, or POW, an energy-intensive process where miners compete to solve complex mathematical problems to add new blocks to the blockchain. Ethereum also used POW initially, but is transitioning to proof of stake, or POS. In POS, validators instead of miners are randomly selected to validate transactions and create new blocks based on the number of coins they stake or lock up as collateral. This shift to POS aims to address some criticisms of POW, particularly its high energy consumption. POS is seen as a more environmentally friendly and scalable alternative. However, both mechanisms have their own advantages and disadvantages in terms of security, decentralization, and efficiency. Understanding the technical differences between Bitcoin and Ethereum, particularly their consensus mechanisms, is important. It provides insights into their long-term viability, scalability, and environmental impact. As an investor, staying informed about these technological developments is crucial. Section 6. Investment scarcity versus utility. Investing in Bitcoin and Ethereum requires understanding their different value propositions. Bitcoin's value is primarily driven by its scarcity. With a limited supply of 21 million coins and growing demand, Bitcoin is often seen as a deflationary asset similar to gold. Ethereum's value, while also influenced by scarcity, is more closely tied to its utility, as the demand for decentralized applications, or dApps, built on Ethereum grows. So does the demand for Ether, its native cryptocurrency. Ether is used to fuel transactions and run applications on the Ethereum network. Bitcoin's investment case is often compared to digital gold. Its limited supply and decentralized nature make it a hedge against inflation and economic uncertainty. Ethereum's investment case is tied to the growth of its ecosystem. As more developers build on Ethereum and more users utilize its dApps, the demand for Ether is likely to increase. Choosing between Bitcoin and Ethereum as an investment depends on your individual investment goals and risk tolerance. Bitcoin offers a store of value similar to gold, while Ethereum provides exposure to the growth of the decentralized application market. Section 7. Real-world examples: payments versus decentralized finance. Bitcoin and Ethereum, while both cryptocurrencies, have distinct real-world applications. Bitcoin, with its focus on peer-to-peer transactions and limited supply, is primarily used as a digital currency for payments and as a store of value. Ethereum, on the other hand, powers a wide range of applications beyond just payments. Its smart contract functionality enables the creation of decentralized finance, or DeFi platforms, non-fungible tokens, NFTs, supply chain management systems, and more. For example, Bitcoin is being used by some businesses as a payment method, and individuals in countries with unstable currencies are using it to preserve their wealth. Ethereum, on the other hand, is being used to create decentralized lending platforms, marketplaces for digital art, and even prediction markets. These real-world examples highlight the different strengths of Bitcoin and Ethereum. Bitcoin offers a robust and secure network for digital payments and a store of value. Ethereum provides a platform for innovation and the creation of a wide range of decentralized applications. Section 8. Profiting from the differences, strategies, and risks. Investors can leverage the differences between Bitcoin and Ethereum to potentially profit. One strategy is diversification. By investing in both Bitcoin and Ethereum, investors can gain exposure to both the digital gold and the world computer narratives. Another strategy is to focus on the specific strengths of each cryptocurrency. For example, investors bullish on the long-term growth of Bitcoin as a store of value might allocate a larger portion of their portfolio to Bitcoin. Conversely, investors who believe in the potential of Ethereum's dApp ecosystem might invest more heavily in Ethereum. However, it's crucial to remember that all investments come with risks. The cryptocurrency market is known for its volatility. Before investing, it's essential to conduct thorough research, understand the risks involved, and consider your own financial situation and risk tolerance. It's also important to note that past performance is not indicative of future results. The cryptocurrency market is still in its early stages, and both Bitcoin and Ethereum face challenges and uncertainties. Investing in cryptocurrencies should be approached with caution and a long-term perspective. Section 9. Conclusion. Navigating the crypto future. Bitcoin and Ethereum stand as titans in the evolving landscape of digital finance. Understanding their differences is paramount for anyone seeking to navigate the exciting world of cryptocurrencies. Whether you're drawn to Bitcoin's digital gold narrative or Ethereum's promise as a world computer, informed investment decisions are key. Remember, this essay is just the starting point. The world of cryptocurrencies is constantly evolving. New projects, technologies, and investment opportunities emerge regularly. Continuous learning, research, and a healthy dose of skepticism are crucial for success in this dynamic space. As with any investment, diversification and risk management are essential. Never invest more than you can afford to lose. The future of finance is being written in code, and understanding Bitcoin and Ethereum is like learning the alphabet of this new financial system. Embrace the potential of this technology, but always proceed with caution and a commitment to informed decision-making. The journey into the world of cryptocurrencies is an exciting one, filled with both opportunities and challenges. By understanding the giants Bitcoin and Ethereum, you're better equipped to navigate this transformative landscape.